Okay, so like we said, tonight we'll be looking at taxation of solid minerals, and taxation of solid minerals has to do with taxation of solid minerals has to do with how we subject entities that are into the activities of mining mining to tax. As you all know, as you all know, one of the reasons why um why Nigeria is a country of particular concern, as stated by some this thing, is because we have a lot of we have lot of we have we have lot of what's it called? We have lots of natural resources or mineral resources, as we call it here in Nigeria. We have a whole lot of it. So the essence of this topic is to look at how are we to subject companies that are engaged in that kind of activities to tax. How are we supposed to subject companies that are engaged in that type of activity to tax? And the how we subject them to tax is very, very simple. Believe me, it is the simplest of what we've done so far. Remember when we started, I was telling you that company income tax is like the major thing we need to understand here. Once we understand company income tax, every other thing becomes very easy for us. So companies engaged in solid minerals are subjected to tax like any other company. They are subjected to tax like any other company, and the assessment is just the normal way we assess every other company to tax. The only peculiarity they have is that first, because the industry is an industry that government is trying to ensure it becomes solid and robust, and is an avenue to make to better the economy. There are some incentives that are provided for companies engaged in mining, and also the industry is regulated to ensure that people are not just mining anyhow. You know, if you even if you own a land, let's say you buy a land, you've gotten your documents and you have all of the necessary stuff, and they now carry out an assessment of the land and they realize there is mineral deposit there, automatically that land belongs to the government. It is no longer yours because the minerals in it is for the government. So what the government will only do is give you some kind of incentives for for the land, but the natural resources on it belongs to the government. So even if you inherit a land from your grandparents, and you now see um what's it called? Is it iron ore? You see coal here. You cannot just start mining and say it's because it's your grandfather that gave you the land. Believe me, you will be jailed. Is an offense to mine without licenses. So favour ó pẹ́ dé o tún da kíláàsì rú. That's your style àbí ó pẹ́ dé o ń da kíláàsì rú. Okay, so those are some of the things about mining. Because of our time, I will not really go into the details of the mining, but I've shared some material with us. It's necessary we go through it, especially the aspect of the incentives or benefit, the incentives available to mining company, the incentives available to mining company, the regulatory agencies, amongst other things. They are very necessary. But like I said, before a company can go ahead with mining, they have to they have to they have to they have to make sure they get the license, the permission from government for them to what? For them to mine. And the this thing, the agency that is responsible for the mining activities in Nigeria is the Nigeria Extractive Industry Transparency Initiative. It's an agency that is saddled with the responsibility of um, of ensuring that companies are doing the mining activities in the right way. So, when a company is engaged in the business of mining, one of the benefits they enjoy is the pioneer status. They get a tax holiday for they get a tax holiday for 3 years, the normal pioneer period. This thing. So you can also read more on that. So another thing that I'll tell you, just like I've said, the taxation of mining of companies engaged in in mining is actually the same as every other company. But there's what we call mining expenditure. And mining expenditure is is capitalized. Is
Good
capitalized.
evening, sir.
What is good about the evening after disturbing the class? Oh, Favor Shike, I'm very sorry, Favor. I'm very
Sorry,
sorry.
sir.
I don't know. I thought you were the one disturbing the class, but I just realized it's another Favor that was disturbing the class. But I think that's the modus operandi of those bearing favor, coming and disturbing. No problem, Favor. Take
Sir,
care
I
of
don't
yourself.
understand. What did I do?
I'm just greeting you. Oh. I'm saying how is the family? How is husband and children? Hope they are okay.
And I'm supposed to be asking you how's your husband, your wife, and your children. It's not me. Because the last time I checked, I'm
Yes,
not married.
you are not married. Don't worry, don't worry.
Yes.
I will allocate the man to you. Don't worry. We'll do arrange one. We'll
Sir,
do
don't worry.
arrange.
Thank you.
I never said it's an optional stuff. I said it's. Did you hear me say it's optional?
I will pass. Thank you.
You pass to where? Where you are passing to it, I'm giving a man there to, so there's nowhere you are passing to. Anyways, let's go back to mining as we were saying. So now there are some costs that has to do with mining, and I'll just quickly like give a brief explanation on those costs. We have costs like preliminary feasibility study. So it's not as if a company will just sleep and wake up and just say, "Oh, today we want to go and mine at this place." No, they have to first do a preliminary um, feasibility study. So a preliminary feasibility study, as we all know, would be a study to know the viability of the mineral project. Mhm. To know, okay, how what are we how should we go about the mining, how deep can we dig, and this and that. Those are just the things about the preliminary feasibility study. And the cost will be what? Will be expense. It will be part of our preliminary expenditure. And as we know, preliminary expenditure are what? Are not allowable for taxes. So it will be disallowed. You just charge it as. So the closure of post-production expenditure. The closure of post-production expenditure are those costs that will be incurred by the entity when they are done with their mining. So, one of the problems, I think, I don't know, but one of the problems I think we have in this country is that our regulations are not as strict. Our regulations are not as strict. If a company should engage in quarry business now, a company should engage in quarry business. What quarry does is that they break mountains into stones, and those are the stones they sell for building. And in most cases, when they do the breaking of those mountains, when they break and break and break, it's not only the mountain you are seeing on the surface of the earth they break it deep into the land. They do even As far as I know, they even use explosive and bombs in doing the breaking of those things. So when they break and they pack all of those sand, that place, in most cases, it usually becomes is it a lake they do call it, where we'll just have water deposit. It's not moving anywhere. Ideally, when they are done with their activities there, they should make arrangements to probably make that place look better. Maybe they will just turn that maybe they will now do maybe construct something there, or they must do something, not that they will just leave it anyhow. But because we don't really have proper regulation, but any which way, God will, we are getting there gradually. But closure of post-production expenses, they are just those costs uh, that are significant to closure and reclamation of the mining site when the mining ceases. So what are we saying? Just like in the provisions of our IS 16, that where an item of PP requires the dismantling, we have to make provision for it. The closure of post-production expenses are those costs we set aside for making that place okay when we are done with our mining. When we are done with our mining, there are those costs we set aside to take care of the place where we are doing our mining activity when we are done with our mining activity. Exploration costs, they are the costs we incur when we have identified an area of interest and we have acquired the right to um, to mine, but before we start the development stage. So there are costs like drilling, detailed geophysical and geological study, the sampling, and other costs. But other costs to know the existence, location, and extent and quality of the mineral deposit. So what do we do to exploration cost? We capitalize it. We capitalize it, and if we capitalize it, we'll now be charging a capital allowance on it. But we can also um, make an election to expense it. Can also make an election to what? To expense it, depending on the company policy. Development cost. Development costs are just cost of drilling, removal of mine, overburden and waste, amongst other things. So they are just like the cost of they are just like they are just like the cost we incur during the mining activities. They are just a cost we incur during the mining activity. So what do we do to it? We expense it, or we can also capitalize it. And where we expense it is allowable. Where we capitalize it is what? It is we enjoy capital allowance on it. The next one is environmental cost. Environmental costs are the cost we reserve for environmental protection, mine rehabilitation, reclamation, and mine closure costs. So just to ensure that um, we put the environment where we are doing the mining activity in proper place, not that we are using our own activity to affect all of their things. So our environmental cost will be cost like the cost we incur to make sure what? To make sure our activities is not affecting the environment, or where our activity is affecting the environment, the cost we use to mitigate the effect of our activities on the environment. So it is deducted as an expense, and that's why we have this. The reserve is recorded in the audited financial statement. The amount to be deducted shall be restricted to the actual amount incurred for the purpose of the reclamation. And a sum equivalent to the reserve amount is set aside every year and invested in dedicated account or trust fund managed by independent trustee appointed pursuant to the provision of the Act. We also have pre-operation expenses. These are the expenses we incur before we start the mining. Exploration expenditure in finding out that there is presence of minerals, expenses to determine the nature and extent of the mineral, and the expenditure of the accessibility, the statutory compensation to be paid to the owners of the property, like I said. where you discover this thing, mineral resources on your land, it is no longer for you, it is government. And when government has assigned you to maybe a company, then they will have to pay compensation to the previous owner of the property. The mandatory lease expense which are the prescribed fee payable on application for mining license, um amongst other things. What do we do to operational expenses? We capitalize it also. We capitalize it and we enjoy capital expenditure, capital allowance on it. They are treated as qualifying mining expenditure. And operating costs are those costs we incur during the period of mining, like our salaries, staff salaries and wages, amongst other things. All of those ones, we look at it. If it is an allowable cost, we allow it. If it is disallowable, we disallow it. For the basis of assessment of a taxation of a company engaged in mining activity, it is still preceding year basis. It is paid to company income. It is paid to Federal Inland Revenue Service because it's company income tax they are paying. And the rate of tax depends on what type of company. Is it a small company? Is it a medium company? Is it a large company? The allowable expense and the disallowable expense, there are no really much difference. Then we have royalty. Royalty is just what you pay to the government for them granting you use of the resources. So you pay royalty to the government. So we'll just quickly look at two or three questions before we call it a time. Any question for me? Any question for me? Hello? Hello? Can anyone hear me?
Yes.
So please
No
let's go to the
question.
so let's just quickly look at two or three questions and we'll call it a time. Yeah. Can someone read? Can someone read, please?
To our students.
As in as investors and policymakers adapt. Okay.
Oh, yeah, one person should just do this thing now. Eh? And then say
As
the obìnrin.
investors and policymakers adapt to the global energy transition in a bid to offer an effective hedge against swings in oil prices, the government has recognized that it is beneficial for the country to diversify its economy. The attention of the country is now towards the development of the solid minerals sector. The Nigerian Minerals and Mining Act 2007, as amended, was enacted to regulate the industry. Incentives for operators in the sector are provided for in Section 5 of the Act. One of the earliest investors in the mining sector, Gold Mines Nigeria Limited, was granted the mining title by the Mining Cadastral Office for exploitation of limestone in Kalago in the southeastern zone of Nigeria in 2008. In spite of so many challenges of the company is facing, it has managed to remain afloat in business. The company has of recent been having tax disputes with the relevant tax authority, and your firm of chartered accountants has been engaged to resolve them. In the 2022 tax returns filed by the company, a major area of disputes between the company and the tax authority was disparity in the treatment of certified exploration and processing expenditure of 60 million naira incurred during the course of the year. Your firm is provided with the following extracts and supporting documents from the books of the company for the year ended December 31st, 2021. So, I'll scroll up. The following additional information was provided. The figure for sundry income included an amount of 8.5 million realized as profits from disposal of the old excavating machine. Allowance for doubtful debts were made up of bad debt written off, general allowance for doubtful debts, specific allowance for doubtful debts, and loan to customer written off. Included in donation was 5 million naira given to victims of environmental degradation as part of the company's social responsibility to the host community. Legal fees included an amount of 750,000 naira, which was paid as penalty for late filing of tax returns. The tax written down values of the qualifying capital expenditure at the end of the 2021 tax year revealed that motor vehicles 2 years remaining. Please scroll up. Furniture and fittings utilized for 2 years, mining expenditure 6 years remaining. As the manager assigned to handle this matter, you are to forward the report to your senior partner, showing a computation of tax liabilities of the company for the relevant assessments year, and comment on tax incentives available to a company in the mining of solid minerals in Nigeria.
Okay, thank you very much. Um, so we'll just quickly look at this. Like I told us, we'll be solving using the same principle we have in statement of profit or in taxation of company income, taxation of company income tax, taxation of company income tax. So it will be very, very easy. To be very, very easy for us. The only thing that might be new to us here is the mining expenditure that is to be capitalized and which will be charging capital allowance for. And there is nothing difficult in that. You just need to decide to understand which one is mining expenditure that should be capitalized, and we are good to go. We are good to go. So yeah, we have all of this. We have all of this, and what's the name of the what's the name of the entity, or what's the name of the organization? Uh, we have the entity to be what? Dutse Mines Nigeria Limited. Dutse Mines Nigeria Limited. We have computation of tax liability for what year of assessment? For 2022 year of assessment. I don't think it's today I've been telling us that all of these things matters in exam. Writing the correct year of assessment carries its own mark. Putting the name of the entity you are assessing is also very important and necessary. So what do we have? We have We have net profit, net profit as usual. Net profit, which is how much? 752 270. Then we add back what? Disallowable expenses. Disallowable expenses. And the disallowable expenses are, we start from the additional information. They gave us something about figure included in sundry income. We'll come back to it. Allowance for doubtful debt. We have the general allowance to be the doubtful, to be the disallowable. Have it? Allowance for doubtful debts. The disallowable there is the general one because the bad debt written off is allowable. We've explained that before. The specific allowance is allowable. I've explained that before also. Yeah, loan to customers written off will also be disallowable. Yes, loan to customers because they are not in the business to be giving their customers loan. Who are they? Is it in their memo that they will be giving customers loan? We will not take that from them. So loan to customer written off will not be allowable. So let's get the difference clear now. You can sell to your customers on credit, and if they fail to pay, that will be allowable expense because that income would have been part of your that sales would have been part of your income, which would have been subjected to tax before. But now that you are unable to recover the debt, we are saying that okay, we understand that people can be like that. No problem. Take it out as disallowable expenses. As allowable expense. But where you now give your customer a loan, are you in the business? Is your company a loan shark? Are you registered to be giving customers loan? No. So if you write off such loan, you will not take it as allowable expense. It's your personal loss. Are we getting it? Next one, we have that included in donation was 5 million given to victims of environmental degradation as part of the company's social responsibility to the host community. To the host community. So this one now is an environmental cost, more like those ones we talked about. It will be allowable. It will be what? Allowable. Are we getting it? It will be allowable. Then we have legal fees included an amount of 750,000, which was paid as penalty for late filing of tax returns. So for this, we'll have what? So penalty for late filing, legal fee. Penalty for late filing of tax returns. Any penalty is not allowable. How much? 750,000. 750,000. They gave us the tax listing down value, but we are not using that yet. Come back to the expenses. Excavating expenses allowable. Salaries and wages allowable. Directors' remuneration allowable. Electricity and telephone allowable. Transport and traveling allowable. Allowance for doubtful debt treated. Auditors and professional fees allowable. Donations treated. Repairs and maintenance allowable. Depreciation is disallowable. Depreciation is disallowable. 70,000. Then general slash miscellaneous expenses allowable. Legal expenses treated. Bank charges allowable. Insurance premium allowable. Exploration and processing expenditure. This is the mining expenditure we are talking about. It shouldn't be taken as what? As allowable expenses. Rather, it should be what? It should be capitalized. So we'll say expenditure and processing expenditure. 60,000. Then income tax provision, anything provision is disallowable. Income tax provision, 180,000. Then education tax provision, 5,000. thousand. So summation will be how much? Then we can now go to less non-taxable income. Non-taxable income. And our non-taxable income will be what? They told us included in sundry income is an amount of 8.5 million realized as profits from disposal of old excavating machine. So we say profit on disposal of machine. Now that's the only one we have. We go back to the SOPM. We don't have any other income there that is allowed, that is non-taxable. So we'll leave that. What do we have as the adjusted profit for this business? Figure. Hello.
Now for the
Yeah, we
disallowable
can hear
expenses.
you.
Ó yá, ẹ bá mi sọ̀rọ̀.
For disallowable expenses, 331,250.
331,250. Uh-huh.
Is it your number? Okay. For the adjusted profit, 1075020.
10
75020.
1075. Àbí kí ló sọ?
Yes, 1075020.
Uh-huh.
020.
Hmm? 020.
020.
So the next thing will be what? So the next thing will be what? To less, we don't have loss relief. The next thing will be to less capital allowance. So we'll say less capital allowance. So that means this adjusted profit will still be the same thing as the accessible profit of the business since there is no loss. So less capital allowance. But here they did not give us, they only gave us the tax sitting down value of the asset. They did not give us the capital allowance. So they did not tell us there was capital allowance brought forward. So we are supposed to calculate capital allowance for the year. And to calculate capital allowance for the year, we can now come here and say calculation or computation of capital allowance for 2022 year of assessment. So they've given us the tax sitting down value for 2021 year end, and they've given us the remaining useful life. So they've made our work very much easier, very much easier. So we'll just say details, motor vehicle, furniture and fittings, then we have mining expenditure, and then total. So having had all of these, we now have what? The tax written down value brought forward, which is 25 million in this case, 22.5 million in this case, and 40 million in this case. Then we bring the additions. What are the additions we have during the year? There was no additions to motor vehicle and furniture and fittings, but there was a new mining expenditure, which is the what? Exploration and processing expenditure of 60 million. So what do we have? The next thing will now be to calculate initial allowance. Initial allowance. So you know, The motor vehicle and furniture and fittings cannot enjoy initial allowance because they are not in their first year. But for mining expenditure, the initial allowance rate is what? 95%. So what's the 95% of the mining expenditure?
Fifty-seven thousand.
What do you say?
57,000.
57,000. So then the annual allowance for this, since they said is remaining 2 years, motor vehicle useful life is usually 4 years because the annual allowance rate is 25. 100 divided by 25 is 4, that's 4 years. If it's now remaining 2 years, we just divide 25 by that 2 years. So that will give us how much? 12,500, have you? But for furniture and fittings, the useful life is 5 years, but they told us it has been utilized for 2 years. That means it will be remaining 3 years. And if we divide the figure by 3 years, we'll have how much? So we have to pay attention to the examiner choice of words. In the first one, they said is remaining 2 years. That is remaining useful life. What we just use to divide the tax system down value. But in the second case, they told us it has been utilized. That means they've only enjoyed capital allowance for 2 years. Then they will be calculating annual allowance with the remaining useful life, which will be 3 years. While the annual allowance rate for mining expenditure is nil, 0%. That means we will not be having any annual allowance. And this will give us what? 20,000. So with that, the sum total capital allowance will be what? 77,000, while the tax written down value for 2023 year of assessment, tax written down value will be what? 12,500 in this case, 15,000 in this case, and what? 43,000 in this case. So capital allowance for the year is 77,000. How much of it can we relieve? We can relieve as much as the profit can cover. Remember, this is a mining business. So when we have this, what are we carrying forward? It is not, we are not carrying anything forward. And if we don't carry anything forward, what will be the chargeable profit of the business? What will be the chargeable profit of the business? Hello? What will be the chargeable profit of
Sir,
the
please, I have a
business?
question.
Go on.
Please, I did not get the explanation for why there's no annual allowance for the mining expense.
So check your capital allowance table where the rates are. The rate for annual allowance of mining expenditure is 0%, is 95 nil. 95 for initial, nil for annual. So if there is no annual allowance, these 6 years remaining they just give us here. It's just to disturb us. Since the annual allowance is zero, there's nothing we'll be calculating for it. Is it clear? Is it clear?
Okay, sir. Thank you, sir.
You are most welcome.
Yes, sir.
So
Thank you, sir.
DT will be at
Sorry, I have
2%.
I have
Go
a
on.
question, please. Yeah, you were saying something about the capital allowance that it will be. I think my network went up at that point. Then the capital allowance will be fully. I don't know.
Capital allowance for what? Huh?
I don't. The one will be relieved. You say you'll be fully relieved of what? Or I don't know if I.
Yes, we will leave it fully because the business is a mining business. So we will leave it fully as much as the profit can cover. Unlike that of other
So
companies that will restrict to 66 to 30%. Is it clear?
okay, so mining,
But
agriculture, and
mining is more like manufacturing now, Abi.
yeah.
Now relieved 100%. Is that not it?
Yeah.
So that is that about that. That is that about that.
Mr. Goodwill, I
That
have a
is
question.
go on.
Hello, I have a question.
Go on with your question. Oh.
Now, mining allowance, we are relieving all the capital allowance. Which one? Which one is
Don't
that?
get it wrong. Even if this even if this case wasn't a mining, we would have relieved it all now because this
Okay, I think
profit
I
we
was the
have
one who said three.
is definitely more than 66 to third of the accessible profit. I'm just saying where the capital allowance is now more than 66 to third of the accessible profit, we will still relieve it all because if we look at it holistically, mining will still be categorized under manufacturing business because they are also manufacturing. Is that not it? Hello?
Okay, okay.
Yes, sir.
Yeah. So that is that. Let's look at another question. Yeah, who is taking us through the question?
Udi Nigeria
So sorry.
Limited is a mining company.
So,
Fire on, what do you want to
so
say?
I just want to ask a question. So there's nothing special with the
Sorry, you
mining.
cannot stop someone in the middle of something to ask a question. You could have just raised your hand or something, then I'll call you to ask your question after she's done. Or while she's when the moment she's done, you can raise your question. But no problem. Oh yeah, just ask your question since you've already disrupted the flow.
Sorry about that. Yeah. So my question is, um, concerning this mining everything, I'm not sure you did any different computation. Is there nothing extra with as regards their special? Is there any special treatment, a special calculation we are doing?
No, there is no special calculation. The only difference here is that the mining expenditure should be capitalized and not expensed. And that's what we have done.
Yes.
That exploration, is the exploration? That expenses, we've taken it out from the what's it called? We've taken it out for as we've added it back as a disallowable expense, and we've now charged capital allowance on it. You remember in the question, they told us that what they had a disparity in the treatment of certified exploration and processing expenditure. They treated it as an expense. The tax people are saying no, you should be treated as a QC. Is it clear?
All right.
Yeah,
Yes. Thank you. Thank you.
you're welcome. Oh yeah, yeah, má jẹ́ pẹ́ tètè ká kíní ilẹ̀ ti ṣú ìyàwó àtàwọn ọmọ mi lórí mi.
Yeah, ṣí lọ síbi tí question wà. Udi Nigeria Limited is a mining company which was established 10 years ago. The company makes up its accounts to December 31st of every year. The managing director, who is an engineer, while having a chat with his former colleagues in the university during the week, heard for the first time the concept of tax neutralities. He wondered how tax could be neutral. On getting to the office the following week, he requested for further information on tax neutralities from the accountant, but based on his personal opinion, the accountant's response was not confusing enough. The company is in the process of filing its annual return for the year ended 31st December 2021 to the tax authorities. The managing director has directed the financial accountant to forward the following reports to you, being the company's tax consultant, in respect of the company's operational activities for the year. All figures assumed correct. Scroll up, please.
That assumption will not do something else another time. Eh?
Required as, as the company's okay, the following additional information was given. Repairs and maintenance include an amount of 1.5 million being cost of fittings incurred at the operational site. Capital allowance completed, brought forward and current year. As at the company's tax consultant, you have to prepare a report to the managing director of Udi Nigeria Limited, which will A, show the tax liabilities payable by the company for the relevant assessment year in line with the provisions of Nigeria Minerals and Mining Act 2007 as amended. B, explain the concept of tax neutrality and its applications to specific policies issues. Thank you.
Okay. So what do we have? We'll have we will have Udi Nigeria Limited. Computation of tax liabilities for what year of assessment?
2022.
2022 year of assessment. So we have 9,000. 9,000. What do we have there? We start with the net profit. What's the net profit? 50,810. Then we have the allowable expenses. We have what? Repairs and maintenance included an amount of 1.5 million. Cost of fittings incurred at the operational site. That is a capital expenditure and it should be what? It should be disallowed so that it can be capitalized. 1.5 million. Okay. Aside that, we have what? Depreciation of mining equipment. And how much is that? 15,400. Transport and traveling, repairs and maintenance, treated, allowance for bad debt. Since they did not give us any additional information, we take this to be what? The general provision. How much? 6,200. We have what? Electricity and other utilities. Legal and professional fees. Certified exploration expenditure. How much? 4,500.
4.5.
And what else do we have? Sorry. Okay. Admin expenses will be allowable. Development and processing expenditure will also be disallowable. Two five. Uh-huh. Miscellaneous expenses obviously will be allowable. What else do we have? So all of this will give us what?
3100.
3,100.
Yes.
And we don't have any other income. The only income we have is gross turnover, and they did not give us any additional information. So this will be our adjusted / accessible profits. Figure,
80,910.
18910.
okay? So we do what next? We
Yes,
less
capital allowance.
capital allowance. What's the capital allowance? Brought forward is how much? 750. Now they gave us capital allowance for the current year, but they said it's excluding current year capital expenditure. If you
Expenditure.
remember when we were discussing company income tax, I told you that when in a question you have a capital expenditure in your expenses that you disallow, and you have to calculate the capital allowance for the year yourself, you have to bring that capital expenditure that you disallow as one of those things you'll be computing capital allowance on. But when they now tell you in the question that okay, this amount of capital allowance has been agreed with the tax authority, or they already gave you the capital allowance for the year, so amount, you will assume that they've already taken cognizance of that capital expenditure you just disallowed. So you will not bother needing to say you want to calculate that one and add to what they have given you. But here they've made it clear to us that this one they've calculated is excluding the ones you are just, this one you just want to what? You just want to capitalize yourself. So we'll say capital allowance for the year will be 12,200 plus. So we have to do computation of capital allowance. Computation of capital allowance for what's it? For 2022 year of assessment. So what do we have? Details. Furniture and fittings. Mining expenditure. Total. So what do we have? We have 2022 year of assessment. Cost, because it's only the new asset we are competing for. What is their cost? For the furniture and fittings, it is 1.5 million. For the mining expenditure, it is how much? 7 million. How? 4.5 million plus 2.5 million. Then initial allowance on it will be what? Furniture and fittings, 25%. 25% will be how much?
375.
And mining expenditure, how many percent? 95%.
95.
And that will be how much?
6,000.
6,650.
So that will give us how much in total?
7,025.
Then annual allowance will be how much? Annual
Nil.
allowance for this is
Sorry.
20%, meaning the useful life is 5 years. I mean,
225.
225.
and annual allowance for this is what? Nil.
Nil.
So what will be the tax being then carried forward for 2023 year of assessments?
900.
900.
So what's the summation here? 225. And that will make the total capital allowance for current expenditure to be how much?
7,250.
750.
7250. So if we add the 7250 here, what do we have in total as capital allowance?
19,450.
19450 plus 750 will be what? 2200.
2,200.
200.
Yes.
You can relieve it all. We'll say relieved 2200. And as such, what will be our capital allowance carry forward? Nil.
Nil.
Having relieved 2200, what do we have as our chargeable profit?
6710.
6710. CIT at 30%.
Now check the
EBT
turnover.
at 2%. Eh?
Nothing. Money, we not check the turnover.
The turnover is 100 million and above.
Okay.
But that's a valid point. Please, let's always ensure we check the turnover to be double sure before we apply a rate. Because if we apply the wrong rate, it will make you lose mark in the exam. That's how much?
18 to 13.
18213. And
Yes.
education tax at 2%. 2% will be for
0
8910 now.
is 89.
1618.2.
Huh?
1618.2.
1618.2.
You too, you can take that point two home. So you will not say you did not take something home from this class.
I have a question.
Who said I have a question?
For you sure?
My hand
What's
has
the
been off
question?
since so.
Eh?
So,
Hello?
yeah. If I on talk.
Oh yeah, yeah. Christopher, you can ask your question now.
Okay, so my question is concerning the number one is I don't know why I'm not seeing your screen. Oh. So I
Your
don't know.
network.
It's at some
It's
point
your
it's showing
network. Log off
your
and
picture.
How
log
You
out.
many
see,
people?
showing your picture.
Uh-uh.
At some point to call me to go.
It's a
It's your
network.
So
network. It's your
that's
network. If you can switch your network, it should be stable. Others can see my screen.
okay. So that's fine. So my question is we were saying something about the the assets, the capital assets. We were saying something like if they told us that it has been accounted for before.
Exactly my question.
Okay.
Yeah, so I don't understand that you were saying something like you told us already. That so that please come again with that what you were saying, please. Do not
When
get
you are to when you have a question, be it company income tax or this thing, and you are to calculate the tax liability, automatically you know you need capital allowance figure, right?
yes,
When in the question, let's say part of your disallowable expenses, just like we have here now, is a capital expenditure.
yeah,
The norm is that if you are disallowing it for being a capital expenditure, then you should charge capital allowance on it. Is that not it?
Yes, yes.
I'm now saying, if in that question the capital allowance for the year has already been agreed with the tax authority, or they told you the capital allowance for the year is this amount, so you work with the assumption that for them to get that amount they are giving you as capital allowance, they've already included or they factored in that capital expenditure you are disallowing. They've already done it, so you don't need to do it again. But if the question did not give you capital allowance, meaning you have to calculate capital allowance by yourself.
On that, yes, on that asset that is that you are disallowing. I mean,
Yes.
okay, okay, okay. So yeah, to know if I'm in line. So if we are giving, like let's say part of the expenses in our POL, like there is a line item capital allowance, and then we were told that the additional information, because I've seen a question like that, we were told that the capital allowance for the year is this, right? So it means those as we are disallowing it, we are not going to add it. We cannot bring it as an addition
Hmm?
to. Am I
Don't get
correct?
me
We cannot
wrong.
bring it
See,
as an.
look at it. This is it. This is it.
Okay.
Like I said again, if the capital allowance has already been computed, don't stress yourself saying you want to now do capital allowance for the capital expenditure you just disallowed and add to it. You don't need to do that. They would have done it before. But if the capital allowance has not been computed, then you have to include that one you just disallowed in your own computation. That's that. But in this
Yeah.
question, the capital allowance they gave us, they specifically put it there. They said is what? It is excluding the current year capital expenditure, meaning the ones they just acquired this year they've not calculated capital allowance for those ones. That's why we now calculated the capital allowance and added it to it. Is it clear?
Okay.
Yes.
All right. Thank you.
All right. Someone else can read the next question.
Esther, I have a question.
Go on.
So if we weren't
No,
told that, sorry, if we were not told that, okay, oh, that capital allowance for the current year is excluding the expenditure, are we going to capitalize it?
like if in the question they put it this way also, that is excluding the current year capital expenditure, then you have to do it now. You have to do it.
I mean, if they are silent, like they didn't say anything.
You will not do it. That's what I've been saying. If they are silent, you will
Okay.
not do it because you expect them to have done it before giving you the capital allowance. But if they are not silent, then you have to do it.
Okay. Thank
Ẹ
you, sir.
pẹ̀lẹ́, ẹ pẹ̀lẹ́. So let's just look at let's see. I don't want this class to exceed 11 o'clock. Oh yeah, let's look
You
at
can
this
do it.
third question.
11 o'clock.
The,
The
And
B
look,
part,
and be sure.
the content of tax neutralities.
you read
God
that up
forbid.
in your
We
part
will
now.
not do it. It's not fair or good way. We don't know it now.
And I just said read it up in your part. Have you checked your part? It's not there.
I not like to check back.
No problem. Don't worry. On the 18th, sha don't let everywhere be blown when you see the question because you don't like to read the part. Oh yeah, question 7. Don't
Yeah.
read it.
7. Yeah. The issue of correct computation and presentation of deferred taxes in financial statement has been a source of worry to the managing director of ICT Rec Mining Company Limited last year. The Federal Inland Revenue Service raised a query on the financial statements of the company and the annual tax return not filed for purposes of tax assessment. Sorry. In order to avoid any tax query on the financial statement, your firm of chartered accountants have been approached by the managing director of the company to assist in the preparation of financial statements suitable for presentation at the annual general meeting of the company and in the tax authorities for purposes of determination of tax liabilities payable. All the relevant books of account have been made available to you in respect of the company's financial transaction. They shot from the accounts of the company for the year ended at 30 December 2021. We waiting with this. Reviewed the following. Oh yeah, okay. Review the following. All figures assumed correct. Additional information. The interest on foreign deposit was repatriated to the country through the company's domiciliary accounts in a Nigeria deposit money bank. The company has unrelieved losses of 2,800 million of 2.8 million. Sorry. That allowance has agreed with the relevant tax authority for the year was 7,250,000. The tax written down value of qualifying capital expenditure as at 31st December 2021, after the above capital allowances have been taken into account, was 35,110,000, while the net book value on the same date was 23,700,000. Scroll down, please. Okay. The operating tax written down value and net book value were 42,620,000 and 33,900,000 respectively. Unpaid tax at the beginning of the year was 15,620,000, while payment in the year was 18,860,000. Assume a depreciation rate of 10% per annum on its mining plant. That's depreciation. The company revalued its mining plant during the year ended 31st December 2017. The evaluation surplus there, from which amounted to 5 million, was reflected in the company's financial statement for that year. You have been directed by your principal partner to work on the assignment and present a draft of the report to him for review before sending it to the managing director of ICT Red Mining Company Limited. The report should now explicit. I can't see what is there. There's one blue something. Computation of the company's tax liability for the relevant year of assessment, deferred tax provision for 2021 and 2022.
Okay, so we have for ICTREC,
The very stupid one.
ICTREC Mining Company Limited. We have what's it called? Computation of tax liability for 2022 year of assessment. In exam, don't go and use 2022 year of assessment and say all of the illustration good we did for us at 2022 year of assessment too. Because people like Folution, they'll say that's what good we said. Did not say so.
Yes, now it's what my lecturer taught me. I'm following you.
Net profit 3320. Don't worry. Sharp pray. The day they release results, everywhere should not first blow.
Yeah, welcome to class. So, net profit on.
Add the salariable expenses. What are the disallowable expenses? I don't even think we have any disallowable expense in this additional information. Everything we're given here has nothing to do with this thing. So salaries and wages is allowable. Depreciation of mining plants is disallowable.
Five.
500.
500.
Depreciation of others.
7840. Josiah share what class? You know.
7840. Then other administrative and general expenses is allowable.
Allowable.
Loan interest allowable. Loss
Allowable.
on sale of loss on sale of
It's
old
allowable.
mining plots is disallowable. Is disallowable. 850. No,
No
it's
problem.
200. It's 200. So those are the disallowable expenses. Then do we have with less non-taxable income? What are
Non-taxable
the non-taxable income?
dividend income
Dividend income.
and interest of foreign deposit. Dividend income net.
Dividend income 3,900. Have you?
Yes.
That's what we have, right?
Àrímọ́ owó ti gbé kúrò.
Interest on foreign deposits. Why is interest on foreign deposits a disallowable, a non-taxable income? Because they told us that what? It was repatriated to the company to the company's domiciliary account in a Nigeria deposit money bank. Interest on foreign income, so far it was brought into the country through a government approved channel, will be what? Will be exempted from tax. So that one, 2,750. What do we have?
For the disallowable expenses, 10,540. Disallowable expenses, 10,540.
10,540. So what will be our adjusted profit?
6650. 34,210. 34,210.
And then we do what? With less loss relief. Because they gave us unrelieved losses here. Less loss relief. So loss brought forward will be how much? 2.8.
2,800.
Relief will be what?
28.
Leave the whole 2.8. And loss carry forward will be
0.
how much? So with this, accessible profit will be how much?
31,410.
What do you call it?
31,410.
410. Then with less capital allowance. So what is the capital allowance? Capital allowance is 7,250. So capital allowance for the year 7,250. So relieved will be what? 7,250. So carry forward will be what? 7,250.
24,160.
So our chargeable profit will be 24 what?
160. I
160.
have a question.
CIT at 30% will be how much?
7,248.
EBT will be 2% on that 34 to 10. How much is that?
34 to 10. What?
Yes, Lee.
Okay.
The profit before relieving losses.
684.2.
684.2. Oh yeah, Mungbo, what's the question?
Okay, sir. Sir, please, if the dividend income was gross, that's where we're going to divide. Eh?
No, whatever, is the fund investment income. So whatever the Added is what you take out.
I don't understand.
So
So
either
I
the
don't
dividend
understand.
is net or gross.
Yes.
Whatever, even if they have put gross in that bracket and we still see
Okay.
39 there, we'll take out
Yeah.
39 as bank investment income.
Okay. So thank you, sir. Secondly, what is that question? So secondly, if we had a loss carried forward, maybe is in this one that in the first year
Huh?
the remaining loss will be lapsed.
Big bro.
If we had a loss carried forward,
Uh-huh.
sorry, it's not here. It's not in that one is in computation of the tax in because where we have our adjusted profit, then you add less your capital allowance. But sir, if we had a loss carried forward,
I don't
in the
seem to get your
yes,
question. No.
I said if we have a loss carried forward after the
Yes.
first year, the remaining loss will be lapsed, right?
No, that's for pioneer. So
Okay. Remaining
that's
power,
for
yeah.
loss made during pioneer period. Sef. If they made loss after the pioneer period, it's not lapse, they can carry it forward indefinitely.
Yes. Okay, thank you.
Oh yeah. Oh.
Please, I wanted to have this additional information for what
Big
is it
bro.
about? I wanted to ask that this additional information for what is it trying to say?
Because they told us to calculate capital deferred tax.
Okay, sir.
Is it fine now?
Yes, sir. Thank you.
Hmm. Hello, can you guys hear me?
Yes, sir.
Yeah, I'm so sorry. The data on that other line exhausted, so I just had to quickly switch. Let's quickly move to the to what
What when I grew up.
for the next thing. You want to be like me that my data is finishing. You
And
don't
you can switch now. Me, my data finish. I cannot switch to anywhere.
okay. It's because you have money now. Your data cannot even finish. Unlike us,
Ẹ máa tọra yín.
1 gig we are doing on online. Okay, we have what? So we have so deferred tax is the difference between the
So I
carrying
cannot see your
amount.
screen.
No, it's not for everybody to see. It depends on your character. Your character is good, you will see. Your character is bad, you will not see.
I can see it now.
It doesn't mean your character is good. I just decided to pity you. So we have carrying amounts. The
Yes.
carrying amounts will be what? The carrying amount is how much? They've told us that what? The They gave us the net book value as at 31 December 2021. 31 December 2021 will be that of 2022. Abi, are we getting
Mm-hmm.
it?
Mm-hmm.
And now you know 2021 and 2022. In this case now is the tax year. Abi.
Okay, yes, yes, yes,
So 2021 end of 2021 is 2022 in this case. So the
yes,
carry amount is what? 23,700.
yes.
While in 2021 that will be the opening. Opening is what? 33,900. But in
Okay.
this carrying amount, they told us what? They told us there was a plan valued in 2017 and there was a revaluation surplus on it. So we'll less the revaluation surplus because you know taxation does not recognize revaluation now. Are we getting it? The tax law will not recognize the revaluation. Are we getting it? So we'll have what? Revaluation surplus. However, the revaluation surplus we have in that 2017 is 5 million. But they said they are depreciating the assets on a 10% per annum basis. Meaning what will go to the what will be in the carrying amount of the asset as at the year end relating to revaluation surplus will not be the entire 5 million again. You know, the revaluation was done since 2017 and they would have been depreciating it. So as at 2021, what will be left there will be what? They would have charged 2018, 2019, 2020, and 2021. Meaning they would have charged 4 years. It will be remaining what? It will be remaining 6 years because what's it called? 10% depreciation simply means the asset will be depreciated for how many years? For 10 years.
10 years.
Are we getting it? Or you can
Yes.
just say 5 million multiplied by what? Multiplied by 10% multiplied by what? Multiply by 10 minus 4. Are we getting it? Because 2018, 2019, 2020, 2021, they would have charged 4-year depreciation. So what will be remaining will be what? The 6 years. That's why you are multiplying it by 10 minus 4. Is it clear? Why for the second one, it will still be the same 5,000 multiplied by 10%, multiplied by what? 10 minus 5. Figure. Hello? So it will be 3,000 here,
3,000.
and it will be 2,500 in the other case, abi?
Yes, sir.
So if we take this out, it will now give us what is the actual carrying amount of the asset, excluding the revaluation surplus, which is 3,900 in this case. And in this case, it will be what? 21,200. Then we now less the tax written down value of it, of the asset. Tax written down value, they told us that what? In 2021, which is opening, the tax written down value is how much? 42,620. While in 2022, the tax written down value is how much? 35,110. So with this, automatically we know what we'll be having is deferred tax asset. What's the figure?
Wow, 11,720.
11,720.
11,220. 11,720.
Mm-hmm.
11,720.
Uh-huh.
13,910.
13,910. 13,910.
13,910.
13,910. But you know, 11,720 and 13,910 is just what? Is just is what we call what? Our deductible temporary difference, because carrying amount is lower than tax written down value. Have it? It will be deductible temporary difference. And if it is deductible temporary difference, what will it result into? Deferred tax asset. At what rate?
Asset.
At 30%. So
80%.
30% of that is what?
For 2022, 4173.
41.
2022 or 4173.
Uh-huh.
10 times
3,516.
11. Yes.
3,516.
Yes.
3,516.
Yeah. So that is that about that. That is that about that. Yeah. That is that about that. So I think we'll call it a time, because on calculation of royalty, I don't think we've tested anything that relates to calculation of royalty before. So should we call it a time, or we should just look at that illustration on calculation of royalty?
So I have a question.
Let
Go
me
on with
have
it.
a look.
Okay. So for the valuation surplus, my network also keto came over. So I want to ask, instead of doing 10,000 times 10% times 10 minus 4, can I like do the cost minus accumulated depreciation? What I get, yes, that's cost minus accumulated.
Sorry, can you take your question again?
Yes, I said instead of doing 5 million times 10% times 10 minus 4, can I do 5 million
Mm,
minus the accum dip?
yes, you can do it that way.
Okay. Deferred tax asset.
Okay.
Hurry out.
Let's just quickly look at the royalty and we'll call it a time.
So we have 7 minutes more.
I have 7 minutes. Ke Ọlọ́run má jẹ́ a rí kò ṣe dáadáa. My mom is still at home. I have long time to live.
But sir, you say we'll close 11 o'clock.
Èmi àti ẹ kọ́ la jọ sọ yẹn. Èmi ò bá ẹ sọ nǹkan tó jọ mọ́ bẹ́ẹ̀.
Tákùnrin àìdè bẹ̀rù Ọlọ́run.
Ìwọ ni kò bẹ̀rù Ọlọ́run. Ìwọ ni kò bẹ̀rù Ọlọ́run. Cause mi ì dá ẹ dúró di táìmù yìí. Ìwọ ló fẹ́ dúró. Ìwọ ni kò bẹ̀rù Ọlọ́run.
Àkókò dà.
Ìwọ ó kù sí ẹ lọ́wọ́ o. Okay, so as I was saying about royalty, I was telling us initially that royalty is what you pay to government for taking or for using the what's it called? What's it called? For using the government, for taking government resources, like we said, all mineral resources are meant for the government. All mineral resources are meant for the government. So the royalty you pay to government is just to generate additional revenue to government and also to appreciate government for allowing you to take the natural resources. So in calculating royalty, we have different methods. We have different methods like unit-based royalty. In this, there is a fixed amount that is paid per volume or per the weight of what you produce that you will be paying. Are we getting it? So that one is very easy to do. We just take the volume times that fixed rate and we are done with our calculation. No time to check time. But for value of sale assessment method, this one too is somehow easier. Once we calculate the volume of what you did, we multiply it by the sales price, we multiply it by the royalty rate. Boom. We are done with calculating the royalty. But for profit-based royalty assessment method, in that one, we look at what is the revenue from the mineral resources. We take out the cost that is incurred in getting the resources. Then whatever is left is what we now apply the what's it called? The rate of the royalty on. Then we have the net smelter return assessment method. This one, the royalty is determined as a percentage of the value received from the sale of the product produced at the mine site. So the cost that we are to incur for further downstream processing, we also deduct it before we calculate this thing. Before we calculate the royalty, but we don't deduct direct cost. We don't deduct direct cost. So that's just all we have on all of those ones. Yeah, we also have advarolem method also. The advarolem method only take cognizance of incremental cost like freight charges and the likes in calculating in calculating royalty. So someone should just take us through this illustration 5.
ATBS Mining Limited is involved in tin mining operations. The company presented the following information for the year ended 31st December 2022. Mill capacity 3 million tons per year. Average ore grade 3%. Mass recovery 75%. Smelter recovery 5%. Assume 1 ton is equal to 2,181 pounds. The company's directors further provided the following operating costs: mining 8 per ton, milling 9 per ton, overhead 18, freight 5 per ton. The fixed fee per pound is 0.20 naira per pound. You are required to calculate the royalty due using the three main approaches. Sorry, using the three main approaches of calculating royalty for the year using the following method. Unit base, assume a pound of tin is worth 4 naira, abi 14 naira. Mi ò ríran dáadáa. 4 naira. Ad valorem, gross sales less cost and assume 4% weight. Profit base, gross sales less operating cost percentage method. Assume 5% weight. Value of sale assessment method. Assume 10% weight. Oh, I want to sleep. I'm done, sir.
Uh,
Sorry. Half they will pay me now. They'll not pay me for.
You're not paying for.
I didn't work for now. The praise it.
so we
Okay.
have
Yeah, but that
and
doesn't
here.
mean when did they pay now, mom?
Ah, sorry. Oh.
So to calculate the royalty, first we first need to know what is the output. The output will be what? They said the mill capacity is what? 3 million tons per year, abi? And they said in 1 ton they can get what? 2181, abi? 2181 pounds. 2181 pounds. So 3 million tons multiplied by that 2181 multiply by, they said the ore grade is what? 3%, abi? The ore grade is 3%. And aside the ore grade that is 3%, what else do we have? We have the mill recovery to be how much? 75%. So we'll have multiply by 3%,
0.03 multiplied by
multiply by
0.75.
75%, multiply by what? 85%. So that means at the end of everything, what will they, how many pounds of ore will they actually bring out from the, how many, yes, how many pounds of this thing will they actually bring out?
Hey, I'm coming now. 1, 2, 3. 1, 2, 3. 125,134,875.
But that will be pounds, abi? That will be pounds of the ore. So now to calculate royalty using the unit based method,
But bóyá figure will correct you.
kilo come. For unit based
It's
method, it will
correct.
just be the 4 naira times that 125,134,875 pounds. You know, they've given us that a pound of tin is worth what? 4 naira, abi? Wait, oh, the pound of tin worth 4 naira is the selling price, oh. The royalty rate should be that fixed fee per pound, which is 20 kobo. 20 kobo. So we'll have what? 0.2. Figure
25,026 975
25026
975.
975.
026 975. Tó bá ti wù ú ló ń tiẹ̀ fi wálé. What do we have next? For advarolem method, we said what? Advarolem method consider the sales less what? Incremental cost like freight cost. So we'll say sales using advarolem method, it will be what? 125,134 875 times what? They've given us the price per pound to be $4 naira. How much is that?
1, 2, 5, 1, 3, 4, 875 times
500, 539, 500.
500 million, 339,500.
Then the freight cost will be how much? That will also be 125,
125
134, Abi,
times
times
5
875 times what?
times 5.
That 5 naira is per what? Is per ton, Abi. Look
Yes,
at it now. The 5 naira is per ton, Abi.
yes. And we have converted this to pounds.
So this will be what? 3 million. Because how many million is the milk capacity? 3 million tons times 5 naira.
5.
That will give us how much?
Remember that song? Remember the last time I signed it?
15 now.
Ah,
3 times
Má
5, 15, 15 million.
má bínú mi lọ school ni. Fún mi ní figure onígbó.
485,
Ló jẹ́ ẹlẹ́ kó lè máa tutù.
539, 500.
485, 539, 500. And what's
539.
now the rate? Royalty rate is what? Royalty rate 4%. Abi? So royalty amount will be what? 4% of that thing is what?
19.
19,421,580. And I think you'll find lójú board ẹ tún lo kọ̀ǹpútà kò tún fine.
Ó ti ẹ̀ dá. Ìlànà ẹ̀sìn tèmi ò fáìn lójú bọ́ọ̀d. Ó dàárọ̀ o, we'll see tomorrow. Ọlọ́run ṣe fún tiẹ̀ fún tiẹ̀ sí the time mi náà. Èmi láńdà ẹ̀sìn tèmi ò fáìn.
Ó fine ní bíbá iná nǹkan tí mo sọ nìyẹn náà.
Mo ti gbọ́. No be your fault now. Ṣèbí èmi ni mi lójú oorun láì ṣe èèyàn burúkú tí mo wá ń ṣe kí ló ń forúkọ ẹ̀. Mi ní sọ̀rọ̀. Olúṣọ́ má jẹ́ n pàdé ẹ̀ ń bus stop o.
Sir, please, I have a question.
And who will answer it? Go and meet
Oh,
those
yeah,
that
sir.
have answer to answer it.
Ọyọ máa bìnrin wà láǹtà tí yín fine gan. Ó fine tí o ti Papa G lọ.
Operating
Yeah.
cost. Oh, ti ẹ̀rẹ́ ni fi mí wé Papa G. Ìyá ti jẹ mí wà láì. What's the operating cost for profit base? 40 naira, abi? 40 naira times 3 million will give us
14 naira nice.
the total cost now. This one
I
here.
have seen it.
Mining, overhead, freight. The total cost is what? 40 million. You know profit base. We say we'll take out all of the cost to determine the this thing. Oh, yeah,
120,000.
120, 4 times 3, 12, 120. Every zero to kusi.
Èmi ò máa lọ school.
I
Figure.
give you figure.
Igbó labi.
What's what is on go?
380, 539, 500.
Royalty
Sir,
rate,
please,
they say we should assume 5%. So what will be our royalty amount?
$19,026,
026
975.
975. Okay. The next one is what? Value of
Sir, please, I have a question.
And who will answer you?
Hey, John, I'm happy in the Jebure.
Mi jẹ mo ti yó. Mi ìjẹ̀bùrẹ́ kankan mo ti yó. Mo ti already
Hey,
there.
mommy.
Mi ti food by. So value of sale, we will have that one to be what? 500, 539, 500, Abi? The royalty rate is just what? 10%.
10%.
Royalty rate, 10%. So with that,
50,
royalty
539,
amount is what?
50. 50, okay, 500, 539, 50.
Onígbó.
Zero kọ́kọ́ lè máa yọ kúrò lẹ́yìn ni.
Tó jẹ́ nǹkan púpọ̀.
Zero kan lè máa yọ kúrò náà.
Ó yá sọ tẹnu ẹ kí n gbọ́, má pa mí dànù fún mọ́mì tó bí mi lọ́mọ.
Sir, the sales in the ad valorem, you know that we used 125 million, meaning that we already converted it to pounds. So the freight cost now, why are we using the tone? We didn't convert it.
Did they give us freight cost per pound? No. They gave us freight cost per ton. And mind you, all of these costs would have been incurred. You know, pounds is like the unit of measurement after they've done their processing. But those costs would have been incurred before they do processing. That's why the cost we expressed as a percentage of the total. Is it clear?
Okay.
Well, ladies and gentlemen, I believe I've been able to convince and not to confuse you about this thing. And if you are confused, to God be the glory. That's one of my aim and objectives also. Thank you very much for your time. Have a good night. And go and read. If you like, go and be sleeping on Manchester and not go and read.